Good morning, Wizards. Hope you're all having a great start to the week so far. Just wanted to actually do a market breakdown because although we haven't seen too much movement in the market overall, we are witnessing right now a bit more of an interesting price action formation now that the weekly candle has closed. So it makes sense to go over from the beginning of the week and start anticipating what could be lying ahead. So we're going to do BTC, XRP, Ether and LTC for this particular video. And the first thing that catches my eye is, again, the BTC chart hasn't necessarily changed at all from what we were originally looking at. This is no different from the prior breakdown, the prior Wizard Wednesdays. The levels have pretty much remained the same. So the $10,000 region psychologically is one of those levels where it's a two and a double-edged sword. So what that essentially means is as long as we remain below the $10,000 zone, which has obviously just been broken as well from support turned resistance, it makes perfect sense that this level is holding as resistance, as you can see after breaking lower 78.6 fib. We've got the external trend line over here with a perfect candle closure alongside all of these other confluences within this zone. There are so many confluences lining up. So we have a pretty good and a fairly good short opportunity on our hands right now already. So you can see with the overall longer term Fibonacci play out as well from the weekly perspective, you can see the wick fishing hit the 78.6, but the 61.8 is precisely where the candle body's closed. So it goes without saying, if you are looking for short opportunities, even for an intraday opportunity, I promised you guys I'd start mixing up, throwing in some more intraday stuff, a bit more of a longer term perspective. But because we haven't been seeing too much movement and because we already understand the longer term perspective, it just makes a bit more sense to give you some intraday stuff within the time being as well. But overall, the intraday moves and the overall long-term targets, you should be utilizing this information to capture intraday moves between this as well. So having a little look at this and the overall structure of what's going on, if we go to the daily, you can see we've had multiple rejections of this zone as well, which is very, very good to see. And to be honest with you, after seeing such a huge movement to the upside, it's highly likely that a lot of individuals are buying around this region. So what I'm predicting right now is a lot of buy orders are accumulating around here, which means a lot of people would probably be putting stop losses anywhere down from around 9050 or even just pushing it all the way down to this region here, which means anywhere from around $8,800 pushing all the way down to around 8,500. It's very likely we could be seeing some wick fishing. And not to mention, when this region has been fulfilled as well and retested, we're looking at this side from the opposing side. We then broke through this resistance over here, came back after rejecting our zone. Now we're coming down to this level. So obviously there may be some form of long opportunity intraday from this level as well, but for the time being, let's actually focus on the possibility of this level breaking. So if I was to even just get rid of this right now, and you can pretty much just see we've seen some momentum, the trend line's holding pretty well, and there's been some solid rejections, but overall we have closed way below the $10,000 zone, and in fact way below even $9,500 for the majority of the candles, and we're still well within this region over here as well. So we just need to see how this goes along. The only real downside threat is of course this, which is pretty much exactly where two prior reversals worked from. So if you are going off that perspective, that is the only opposing threat for this trade. But again, it shows you why many people are potentially going long right now. So the reason for that is because there's a broken level of resistance. We've come back and rejected, and we could be looking to break that trend line. But in that time being, we're looking at some potential wick fishing, which means going over to this one over here, plotting that onto there, the ABC, and the ABC nice and fluidly actually lines up precisely with the $8,500 zone, which is of course one of our zones. It lines up perfect, so we can use that as an extra confluence as well from an intraday perspective or even a 4-hour outlook to make this a bit nicer. We can see after doing that huge movement, we know the general rule of thumb when it comes to crypto, and especially with BTC and XRP, after seeing a fairly large upside movement, it can often come crashing back down. And this is the region where the majority of people get really sucked in from that euphoria. But there are so many different ways to look at this as well. I mean, I believe it's from this angle over here, approximately. If you drag that down to there as well, or even down to there, you can see the confluence from that trend line as well, which means from that point to that point to that point, there is a trend line breakout and retest potentially on the cards around this zone over here. If you drag this down all the way to the bodies from the second wick to this region here, you can see again another perfect example of how this is actually lining up even lower with the Fibonacci targets, and I am more in favor. As you know, overall the downside bias is what I'm favoring, so we do need to see how this region holds up, but the overall position, as you know, right now should be exactly this. And then all we'll do from there, and you can see on the daily already there is a lot of a bearish pressure already occurring from this perspective. So this is what I'm looking at right now. If we just get the short tool around this region here, stops just above there, very short-term target from there. Let me just go down to the 4 hour in a second, just get this all marked up. Again, ignore that stop loss, we're not done for this yet. There's two ways you can play this. We've obviously rejected the $10,000 zone, so you can either go in for the fairly wider term swing, but this also means the Fibonacci targets down here for the short term perspective should be ignored because the risk to reward ratio is horrific. So you obviously wouldn't be doing that. If you was going for a move like this, you'd be going from an intraday perspective and really dragging that stop loss down. That would of course be an intraday opportunity on this side. What you would do is go down to the 4 hour or the 1 hour, but I wouldn't be entering here, to be honest with you. I'd actually be waiting for some form of pullback. I do believe there could just be at least one final touch of around $9,300, where even if you just pull back to this region, you have saved yourself several pips from initially entering at the lows. It's not wise, even if there is a high likelihood of a breakout, to actually enter anywhere near these low regions because it's just not going to work out well. You do not sell at the lows and you do not buy at the highs, no matter how profitable it may look. So understanding this and understanding again even the smaller time frame Fibonacci's, look at the absolute precision of that. Before I even plotted the Fibonacci, we've got an exact 61.8% Fib. So it all aligns really nicely. And again, if you see the little extension higher, always preferable to try and hit the 78.6 because you're getting a much more refined entry on that particular setup. So again, anywhere near this region, looking very, very nice. But what I would be looking at, even if I was going for a movement like this, where, to be fair with you, there is a very high profitability opportunity. You're looking at a 3.41 on a 4 hour perspective. You can see even at this zone over here, you've still got an above 2.0 risk to reward ratio. So even in this circumstance, because the wicks are overall over there, you could really increase the maximum profitability of this setup by going over to the 1 hour time frame as well. Again, just showing you some top down analysis and how to actually do this in real time. We'll just drag this over there very quickly. And watching how this is actually already breaking this level is quite interesting. But overall, you can see this is why you would obviously want to wait for a pullback of some sorts as well. Because if you enter here and you look at the same stop loss size, it's actually threateningly close to where the Fibonacci extensions are. And knowing how Fibonacci's and price always goes back down or go back up to where it was at some point, it's really in your best interest to wait for some form of guidance and a much clearer signal. So imagine then entering or executing from the 78.6. Not only do you no longer need a stop loss of this size, you can also just drag it much lower and keep it a little bit closer and tighter, because if you look at that now, you've got a 5.14 risk to reward ratio. And remember, in the prior lessons of Wizard Wednesdays, for example, you would notice when you lower the stop loss, you can also increase your position size. So that means if you're normally risking around £100 over there and you're trading, let's say £1 a pip, just to use it in theory, or let's just say the stop here is 256 pips. So you risk £1 a pip, and that means you will lose £256.8 if you hit your stop loss here. But if you're entering, and obviously if you've done this over here, then you would get wiped out pretty quick. But if you then drag this over to here, and you notice you no longer need to be having a stop loss that high, you can drag this all the way down. And that means you can take into consideration price action. Again, you understand if need be, because the risk to reward is so high, you can actually lift this all the way up to this level if need be, and you still have a very solid RR ratio. But preferably, because there is a lot of wick fishing, you would want to wait for this region anyway, and knowing there's a trend line up there, you may even get lucky and catch the order from there. And obviously in that circumstance, you know, your stop loss could be over there, and then notice that that's now 145 pip stop loss from what was approximately around 260 something, I think. So looking at the size of this and looking at this, you've realized that because your stop loss has now massively increased, where you were once risking £200 plus, you can now risk a lot more per pip, let's just say, to actually get to the same number times 145. So all you would do in that circumstance is times whatever number you are willing to achieve. So moving on from there, just understanding this, then just keeping it all simple. Hopefully you can understand now, a bit of patience could be very profitable indeed if we do see this come through. And you can put that into perspective from there as well, from that counter trend that's been broken, boom, rejection, retest this region here, and then roll back over to the downside. But if you wanted to go for the slightly higher term picture using the same structure, then the first thing you notice is, of course, the extension even lower. So you've got short-term move over there, you've got the extension to the Fibonacci, the long-term one, and then in the worst case or best case scenario for the shorters, you're looking at around 1,400, and in fact no, that is a little bit less. Let's just double check that there. Current price of this is there, which means around 1,400, not too bad, and then 351. So that's a pretty good pip amount. Imagine catching 14,351 pips within a single movement from a very precise entry like that. And again, with a smaller stop loss, what that means is, although you're still risking the exact same amount, you have a much bigger contract size. So if it does go in your favor, you are going to be making potentially double or even triple the amount you normally would, because the contract size is larger, but because your stop loss and your entry is so precise. And this is the cruciality of having precise entries, because you can do that and enter at a very good price. The stop loss is smaller and it works massively in your favor. So put all of these into your perspective and understand as well, even if we do not see the full shift down to the $6,000 region, this is a major point of interest for me as well. So if I go back to the daily, exactly where that 78.6 fib is, you can see there is some form of head and shoulders going on here. So we've got shoulders, we've got a head, and if we were to duplicate this zone to around there, this would be an excellent region for a refined entry. So if we saw a very sharp spike, bearing in mind this could take a few days as it is, so if we extended this out to there, and you can see if we went all the way down to this level, not only does it confluence with the 78.6 fib, which means with it being so close, it could even tap this level, but still close within this boundary. And understand this move could take maybe 2 to 3 days. It could maybe even come through by the end of the week. That would then correlate with the price moving further towards the exact Fibonacci level before fulfilling a head and shoulders and then booming and rocketing through the roof. And the best way to put this into perspective and give this a test run is to, again, let me just double check that, clean this up a bit more. I'll still keep the other trend line as well, actually, and I'll just keep the fib. I was going to do something else, but what I'll do is, in this instance, is drag it up to that zone there. And then you understand, in the worst case scenario, if price does fall a little bit lower, you can liquidate your position in even more profit and then catch a potential long opportunity. So a reversal from there, obviously, if you start looking at these Fibonacci targets, they align a little more closely with much higher prices. And then if this does actually hold in reverse, that would confirm that $8,000 is actually the final floor for 2019 before we actually start blowing through and achieving the end of year $16,000 region. So we are still at that very critical level, but we can see with this head and shoulders forming, this is probably the most important price point in time right now. So I do believe this will come through lower, and I do believe with this movement over here, we could be in store for a massive upside explosion. So we're still keeping all of these levels in consideration, and we do understand that in the event this breaks, it will just retest and nosedive all the way down to the 5K and the 6K region here. So it's still on the cards, has not been disregarded. It's still in the open and something we are still anticipating. But I just want you guys to be a little bit cautious with all of this price action right now. But it is best to wait or do the potential double trade setup to short from here down to there, potentially catch a long. And if this is in fact the head and shoulders, the $16,000 region, if I was to do a risk to reward setup on this particular region, stop loss there, again, you're going for a very, very large trade, then you can adjust your stop loss further from there. You're looking at a 6.6 on that setup. And again, if this actually starts exploding before we shift into 2020, then you would be seeing a movement that would be doubling in price. If you've done physical investments, you would be making 100% return on investment by the end of the year. And if you're margin trading, then you already know if you caught a refined price as well, it would be an even more profitable opportunity. But in the event we do see that push down to 6K or 5K, we'll leave the buy orders set there and again accumulate and stock up from that point onwards. But moving on to XRP, same sort of theory over here right now. We've broken through the 30-cent support region, triple top over here, nice little formation, 3 candlesticks, huge push down as well, which obviously indicates a huge amount of selling pressure is present within this region. Follow this up with the fact that the candle bodies have not even closed above this region by a tiny bit. We've seen the exact precise candle closure within the same levels. Plus we've got the wick fishing, we've got descending wicks. All we need to really do is pay attention to this region over here, because if we do see a little push higher, then we'll very likely be tapping this zone before rocketing down to the downside. And if we do take into consideration the BTC movement over there, then for XRP you would be looking approximately at the 24 to 25 or even 24.5 cents if you really want to go for that more refined entry as well. So we need to start taking these levels a bit more seriously now because of the reversal that has occurred. But remember, we're on the weekly as well, so if you do want to just add this very quickly, the Fibonacci, I haven't set this up properly, but you've got the precise, absolutely perfect 78.6 retracement as well, exactly on that zone. So the reason we will be holding these trades a little longer in this event, by the way, executions are all available and possible from right now. So XRP right now can be executed. Same goes for BTC for the short opportunities. Ether holding pretty nicely as well, and same goes for LTC, which I'll just cover very quickly. I don't want to go into too much depth on this one, but we've broken the trend line. We're going to look at a potential retest of this zone around here as well. So we're looking approximately at around $50, pushing down to around $48.50. So I don't want to go into this one too much, but just give you the main overall targets. You can see the shoulder, the head, the potential shoulder over here. Any form of wick fishing will come down to $40. So you need to be a bit careful. But looking at how this is moving right now as well, there could be a pullback to come forward at some point in time. And Ether again, rejections, no doubt over here. This is a nice fib setup. Absolutely precise, 78.6 minus 27 aligns with the 78.6 as well. So there's a double confluence over there, pushing this even lower. The 61.8 aligns with around $110 to $111. So it's all going hand in hand. Broken counter trend, retest, rejection, intraday fibs as well in combination with this, and boom, straight to the downside. So you could be seeing that similar price action on Ether as well. And for XRP, I'm just looking at this trend line, because if it does hit this trend line, then I would very much like to execute, which would also correlate exactly with the BTC one that we've just covered as well. So from a 1 hour perspective, seeing that counter trend line movement pull through would correlate ever so perfectly with, if I go to the 1 hour on this one as well, you can see right now we are actually potentially looking to break out as well of this movement. So understanding how this has just broken through and mirroring the same movement as BTC, we have more than enough confluences to understand we're looking at a potential short-term push to the upside just around these regions here. Trend line, I can even fix that. Depends on how you want to look at it, but I would potentially take the weekly into consideration as well, because it would align more with the overall key level here. But again, this depends on the speed we meet the region. If we meet the region around here and it confluences with the trend line, then that's absolutely fine. But if it is following the principles of the weekly one, then it's very likely going to be a little bit higher and more within that 30.5 cents region. So for the time being, I just wanted to give you these short intraday setups and understand if you are going to be doing this, just try and make sure you do this properly and just be patient. Understand that there's a counter trend break over here within a particular channel that's just been broken as well. So all you would do from the short side, let's fix this, enter this over here, take this level into consideration. You've seen the regions, it's down to you how much you want to do this. It can even be from there, or you can obviously look at the much lower extensions. But for the short term and for the time being, I do believe an entry all the way down to here is still fairly remarkable. And taking into consideration, if you do go to the 1 hour time frame as well, just dragging this even lower to here would massively increase that risk to reward ratio. So I hope this video has been helpful and hopefully covered a lot more on the market. I'm going to be throwing in a lot more intraday content as well. That means a lot more intraday, weekly outlooks, slightly even monthly or even yearly outlooks. We'll be covering the overall picture and giving you guys absolutely everything. And just remember, whenever I'm doing this analysis, to mirror the key levels, copy exactly what I'm doing as well in terms of chart structure, and remember to use this in line with your own analysis as well. You always have to do a bit of a back and forth comparison because it will massively improve your trading. But for this time being, you can see all the setups are nicely structured over here. So we're just sitting back waiting for these to come through. And again, we can start getting ready to set up a potential short opportunity and then going for a forward long. But this all depends on the movement. If price does extend at the end of the day all the way down to 6K, then you're just making more money. So the first point and port of call to take a short and small portion of profits would be around the $8,500 region. This would be the first port of call. where you would maybe take off 20 to 30% of the profits, maybe even 50, depending on your risk appetite, and then leaving the rest to ride. If price action pushes down, we close the positions and start looking for a long, or we can even leave a small 10% running while still looking for a long position. Understanding if a long breaks out, simply just close out the short in a bit more profit, and then it's a win-win situation. So always think of this situation as well. It's called hedging, something that I'll be covering a lot more within the course as well moving forward. But for the time being, let's just understand that all of this is unfolding. Very, very good setups across the board. It's now just a waiting game. So I'll be back in the Telegram shortly with some updates as well, and hopefully we can get some good movement from here.